Hello, everyone, and welcome to the webinar hosted by Ixula on the topic of how to prepare for current COVID and after COVID scenario within retail and CPG businesses. I'm really sorry, I was facing some issues in pushing the slides. Uh, Let me introduce myself. My name is Samarjit Singh. I'm the co-founder and CEO of Ixula. I've spent close to 20 years now within the retail e-commerce space, uh, starting with my journey, starting a company called Taj Online, which got absorbed by Star TV, then got involved in setting up Bazi, which became eBay in India, and then setting up Ixala around 13 years back uh, to a 1,000 people company today. I've spent my entire working life in as part of e-retail businesses, and I hope to take you through this presentation. Hope you will like it. Before I start this presentation, just uh, I hope, I think everybody will generally be on mute. If you're not, please mute yourself. There is a button on the which you will see as a question mark during any time of the presentation. If you have a question, please do not hesitate to write that question there. I will take all the questions after I finish the presentation, which is going to take between 30 to 35 minutes. You can ask me a question by your name or anonymous, whichever way you like it. We do not waste your time trying to record or take screen shares, because we will share the entire presentation as well as the recording of the presentation with you post the webinar. Just going back, I think firstly, during the COVID state, I wish and I pray and I hope that all your families and your near dear ones and your friends are safe uh, in this pandemic situation. And I, as Ixolite and as one of the leaders of the company, I really wish and pray for the same. I hope you're staying safe, you're staying home, and I hope that we all will come out very strong out of this situation. So, getting on with the topic, COVID-19 is a global crisis. Uh, it is a global crisis because at the speed and the scale which it has affected the world. Uh, in my life of 45 plus years, I've never seen a situation like this. In fact, I was talking to my father, who's 75 plus. He's not seen a situation like this. So generations have not seen something like this. So there is something completely unprecedented and unplanned, which we all are facing. So this is surely creating a universal imperative for businesses to take some immediate action to sustain. Firstly, I think sustenance has come in the question for a lot of businesses, and also transform to face this pandemic and the situation this pandemic will leave us with. The aim of the webinar is to discuss and prepare for the current COVID-19 situation where we are, and its aftermath, as to once we are finished doing this, finished with this COVID-19 situation, how to handle your businesses post the same. So one of the things I wanted to highlight right at the beginning is that we will keep our discussions more focused on retail and CPG side of the business. And that's where broadly our focus is going to be. Another thing I also wanted to highlight is that we have taken a lot of references to present from the Chinese situation, because firstly, the China has broadly beaten COVID. Plus, China has faced COVID before potentially US, India, or Europe, which are the larger economies, and which is where the data could have been procured. So you will see a lot of examples coming out of and examples and data coming out of China. Uh, and we've used that data to potentially put across our points on how potentially this situation will evolve within India, Middle East, which are very, very similar markets, and Southeast Asia too. So going ahead, just a minute. This is broadly the agenda. Uh, that is, how has COVID-19 impacted business? We'll throw some data at you as to how it is looking like from all sectors, subsectors, industries, categories. How has the world overcome such global crises in the past? We have gone a little past in SARS, in MARS, and seen that how the world has, the countries which were impacted highly by this situation came out of that situation, and we picked up some learnings from there. Then we have tried to project that how that is impacted more on India or in similar economies. It's a very high level view because it's too early to create that data. And then we have gone in depth into learnings from China to say that how China has seen the impact and how it has potentially recovered. And finally, we are ending up with Ixula perspective to say what will be a framework by which you should evaluate your businesses, and what are the things which you can do quickly to take advantage of the opportunity which this pandemic will create, and also how to navigate through such a pandemic situation, which we all know has affected all the businesses. I think our thought process is history has always taught us, so we should use historical examples to potentially predict how would the situation pan out. So going by the topic, how has COVID-19 impacted businesses? If you will see across that, whether it is automobiles or whether just a sec, yeah, whether it is automobiles, consumer durables, FMCG, which is also called CPG, whether it is retail, hospitality, telecom. We've just highlighted broad sectors, and we will focus our energies on more FMCG and retail side of it. But if you'll see, for example, automobile has been seriously impacted. One reason is obviously it's a little discretionary spend. Second is that it's seriously dependent on component manufacturing, which is very distributed out nowadays across the world. And interestingly, COVID first happened in China and then has happened to the rest of the world. So by the time automobile manufacturers was facing supply constraint from component perspective because China was affected, by the time China got uh, over with COVID, the lockdown happened in the rest of the world, so the demand side constraint came. So automobile is sector which is really badly, is seriously hit. Consumer durables, I think again they have seen sales drop in immediate terms. FMCG, I think they are seeing short-lived supply disruptions, especially when there is a 100% lockdown. Certain categories like personal care, food delivery, in fact, are seeing a lot of growth, while the discretionary spending will see a decline. And we will talk about category to category as we move ahead. Retail, I think, due to lockdown, this has been badly hit because retail is shut, and it will only see so-called retail. We're not discussing e-retail at this moment. We'll only see a moment once this whole thing ends. One of the sectors which is severely, or I would say catastrophically hit, is travel and hospitality. and this would take a lot of time. I think a sector like telecom is interestingly positively hit because with work from home and bandwidth requirements really surging, this sector has been seriously gaining traction. There are challenges in the Indian context from a GST challenges which they're facing on handset side, but broadly the sector is more or less okay at this moment. Um, let's look at how the supply and the demand side have impacted retailers. Uh, First is the whole obstructed logistics. There are increased hurdles for transfer of good for long distances. Global shipping, trans-harbor shipping is seriously affected, so this is a big constraint. Um, there are constraint and shutdown from supplier side. I think we did discuss that China got shut, so the whole supply chain has got down broken. And again, the impact we said, which is disrupted demand. There is change in consumer demands with spikes in certain products, as we discussed, as sanitizers, masks, long-lasting staple foods. And then there is a lack of demand for discretionary products like travel, accessories, fashion at this time. So we picked up this data from an Accenture survey where they went across and surveyed all the retail and CPG companies, and broadly, 94% of the Fortune 100 companies are seeing a supply chain disruption, which is nearly 100%. 75% of the companies have had a negative or strongly negative impacts on their businesses, and 55% of the companies plan to downgrade their outlooks or have already done so. So you can see that there is a serious impact on all the businesses. Let's now start looking category by category. And again, I said that we will keep on taking examples from China. So we here is an interesting impact. We have done it from traditional retail trade and online retail trade. So sales decline can be seen across category and most evident in apparel and footwear, home and furniture. This is more discretionary electronics, health and beauty. But yes, food and grocery has still been strong. I think it's essential. But the interesting part to see is that how between online and offline there is a gap. So if you'll see apparel online, yes, there is a drop of around 18%. But on the online side of it, uh, you can see that the jump between 10% offline versus online is 26%, and the drop of 33% on retail versus online 18%. So online is lesser affected in discretionary, and there's a huge surge on the online essential side of the business. These are the data again we picked up from China. Again, if you have to draw it across, let's say, format. So if you'll see channels on the y-axis, mainly brick and mortar stores, which is offline stores, or brick and mortar stores which have online channels, and pure play e-commerce across, let's say, categories like apparel, home, electronics, health and beauty, and grocery. You will see that brick and mortar is really red. These are the guys who have really been affected. Omni-channel guys are lesser affected in that respect, and pure play companies are the least affected, with grocery as being food and grocery as being the category which has seen the least amount of effects. But you can see that there are change in demand patterns there also. There is a risk of supply chain disruption, especially in very strong only hit lockdown countries. I think specifically if you take example of India, they have enforced the lockdown very stringently, and the goods movement has been really disrupted. And there is a need to stabilize the operations. And we hope that once the tight lockdown period ends, this can be resolved and companies move forward. Similarly, if on a brick and mortar store, there is a severe impact with 70 to 100% reduction in sales. In an Indian context, where there's 100% lockdown in these categories, it's 100% reduction in sales. Uh, and I think need to have short-term measures to ensure business continuity. There is for people who've had an e-commerce shift, there has been reduction in consumer demand but the online channel is still going strong for them, and a need for e-commerce operation in this crisis mode has never been felt more than before. So moving on, how has the world overcome global crisis in the past? We thought we should quickly give you flavors of how in the past, when the world has been hit by this pandemics, how has the world reacted to the same. So you'll see that if we first talking about SARS, which had hit in 2003, it was predominantly Chinese thing. You will see that it hit by around March, and the lowest bottom came in around May, and then the steady recovery happened. So SARS and MERS are the two more pandemics which have hit the world, and Fukushima is more a natural disaster. So if you'll see that in an epidemic situation in both the cases in MERS and SARS, the drop happens over let's say max of 2 month to 1.5 month period, and it has taken another 2 months to come back to the same levels where the world was working. So it's a total cycle of between 4 to 5 months before a V-shaped recovery happens. If you'll see that in case of MERS, which had affected South Korea in 2015, it was a very similar thing. And within 4 to 5 months of pandemic, the recovery happened. Whereas in case of Fukushima, the drop was very sharp, but the recovery also happened within the next 2 months itself. So broadly, epidemics and disasters have shown short-term impact. But generally, by these three experiences, the recovery also happens between 4 to 5 months, and this has been the learning from the past. So let's see how the impact of COVID-19 on business in India, and it's a very early and high-level view. Essentials has seen a growth, especially with retail. A few of the categories like gaming have seen a serious growth, but all discretionary spends, which is spends on home categories, beauty, travel accessories are down by serious numbers. So the impact on India has been very similar. For India, we have not presented detailed data because firstly, it is very initial part of the impact. So we were not sure about the data, but in case you are keen to understand each of these categories numbers in detail, you can write to any of us and we can send you detailed estimates, current estimates on how much has been the drop. So fundamentally, again, essentials versus non-essentials. Essentials have seen growth, non-essentials have not seen the growth. Very similar, very high increase on essentials, lifestyle categories between 15 to 30% drop. A very interesting insight was observed here is that the purchase category has been more family oriented than individual purchases. So categories which are more family oriented have seen an upsurge versus categories which are more individual driven. So that's another insight which we found is an interesting insight. Another interesting insight we found is that there has been an increase in search for brand agnostic searches. So people are searching by category and their need rather than a more brand search that is pre-COVID versus during COVID period. So that's another interesting trend we have seen during the COVID period. So what is the roadmap ahead? We again have used China as an examples, which is if you can see, only few Chinese territories saw less restrictions. Planning during the outbreak and recovery period showed trends that can be adopted by India or similar geographies like Middle East and Southeast Asia. And China is now a lower restriction zone, so you will see business recovering quicker, and we've seen that how they are recovering, and we can learn from that data. And business recovery in China would show the recovery curve for when the lockdown gets over in India, Middle East, Southeast Asia. How would the recovery happen? So we've chosen all these areas and have tried to predict data on each of them for us to get a perspective. Here are learnings, category-wise impact. If you will see that across categories in consumer electronics, there is a drop, clear drop. There are outbreaks has posed challenges of supply chain. sales and employee safety, and Chinese tech companies are striving to turn challenges into, let's say, opportunities. We'll talk about opportunities. Next ahead, if you see that China produces 70% of the smartphones sold across the world, and within Q1, which is fundamentally January, February, and March for them, the smartphone production is projected to decline by 12% year over year, and it's making it the lowest output in the last 5 years. So obviously there is a clear impact in consumer electronics as a category. If you look at FMCG sales, this is a little more elaborate data. So if you've been tracking China, the whole Chinese New Year got extended into an lockdown period, which is how China went into lockdown. So Chinese New Year is the biggest, one of the bigger festivals for them. So you will see 2 weeks before Chinese New Year, there was a 12% surge from the normal in terms of the FMCG sales, and just 1 week before Chinese New Year, it was higher by around 18%. But once they started seeing the lockdown, which was 1 week during the Chinese New period, you saw that the sales declined by around 24%. And once the outbreak was clear, which is 1 week after the Chinese New Year, the FMCG sales were down by 41%. So on total, FMCG market plunged for 24% in the week after Chinese New Year's, as customers responded to the government calls to stay at home. This was followed by a 41% decrease in sales in the second week of the extended lunar new holiday seasons. So again, total drop of around 12%, total customer transactions dropped by 10%, customers traffic dropped by around 2%. So obviously they saw the same, saw a similar story. FMCG saw a similar story. Again, in the fashion industry, same offline stores were closed. No brand communication was happening, especially restricted offline activation resulted in delayed campaigns. The supply chain also was disrupted in a large way from a logistics perspective too. And all industry events, and we know fashion industry is very event centric for its promotions, and a lot of categories, in fact, their sales are enhanced using events, were seriously affected, though they were doing live streaming in a lot of cases. So most retail stores, because they've been following a shopping mall or a plaza decision on their business operation, are seriously affected. One of the bigger trends we have seen is that all retailers have been working with real estate owners for their commercial rents, and I think this phenomenon also been reflected in India, Middle East, and Southeast Asia, where people are negotiating their rents to come out of this crisis. So this is another situation where we've learned from. So what is the roadmap for recovery? Again, we're trying to learn from the Chinese experience, and we have two broad themes which we thought have emerged. What is low touch economy is here to stay, and e-commerce would see an increase adoption and would surely be a preferred channel. So these are two roadmaps to recovery paths we have seen, and these two trends are the other things we are watching for. So now, if you look at on the left hand side is the retail part of the data. So this is more SARS. When the SARS happened, you will see that the crisis peaked during April and May, which is these 2 months. Sales of retail hit the bottom in May, but quickly rebounded in June. Right? Sales recovered and peaked in July and stayed relatively stable, remaining across 2003. So it came back to the same levels from February till, let's say, June. They were back. So 4-month cycle, they were back. And if you will see that there is a survey conducted by CEIC of the post-COVID situation, you will see that 77% of the people saved their money during Chinese New Year because they got hit by COVID. But as per the estimate, 60% of the people said that they will increase their spending as the disease situation becomes relatively stable. So the sentiment has not gone bad. They're again ready to spend. So the thought is that if that's the sentiment in China, I think again there'll be a V recovery as happened in the SARS is the expectation, and the initial trends are showing that the recovery is happening in the same way, and show that people are most willing to spend money on the following two categories, which is social gathering, which is restaurant, all of this, and shopping. So people, it's not that yes, people have saved money, but they're not extending their spending. As soon as the lockdown or situation starts improving, people are spending that money back. So this is not spoiling the outlook. It has been the Chinese learning. It's just deferring the decisions on spending. Another thing which has been observed in the Chinese outbreak in the past as well as in COVID situation is that technology, innovation, and spends have not been curtailed. So the R&D spends, in fact, remain stable. So for example, China has been investing heavily on 5G, and in fact, they use this opportunity to use 5G powered robots, providing 24-hour care for their patients. And in fact, there were a lot of investments which were already made in this direction, and nothing got curtailed. And so the learning which is coming from there is that R&D spends are not to be curtailed in a situation, specifically in technology areas which are fundamentally moving towards a low touch economy kind of a model. Those spends companies should not curtail on. Again, a lot of investments on the unmanned retail and traction on that direction was seen. Unmanned retail is accelerated during the COVID-19 outbreak as it avoids human contact. And I think this is another trend or investment we have seen that they have not curtailed their investments on. So in fact, stock price of unmanned store, unmanned delivery, and UAV, etc., are on the rise. So all the companies which are delivering these services and solutions have been seeing a stock price being raised in China. I think this is a very interesting slide where we have tried to put in a perspective on first that the low touch economy is here to stay, and all investments in the direction of low touch are here to stay. We looked at the last two slides, and now we're moving towards that e-commerce would grow into a larger business. And here is I would first like you to focus on the initial part of the conversation where say e-commerce penetration would rapidly grow once lockdown is relaxed, and we have more detailed slides as we move forward. Most new users who are coming to e-commerce would stay on, and the past experience from Chinese SARS and MERS has shown that people who shift habits to online during these periods, they stick to this channel and they do not go away. And adoption will also grow across consumer segments. So the non-millennial 45 plus age group also has seen in the past in SARS and COVID situations in China that this segment also starts using online shopping in a big way. And even from an economic strata perspective, we have a next slide where we will present that. Another data is that Alibaba and JD both grew significantly during the 2003 SARS outbreak. In fact, there is a case study which you can actually Google and get it, saying that how much was Alibaba helped by the whole SARS outbreak, because these kind of big pandemics or life-changing events lead to tectonic shifts in terms of customers' behavior on a day-to-day level. So what we have done is we have tried to plot that how would this journey look like. So on the y-axis is the recovery stage. So example of recovery stage is the stage one is where you are proactive health buying, and to finally living the life new normal. I'll explain it as I go through it. And on the y-axis we have the growth of e-commerce. There is a small dotted line where we are seeing that obviously the e-commerce growth, which is indicating the e-commerce growth will happen. So if you look at when such a pandemic hits, the step one thinking is proactive health-minded buying, which is interest rises in products of overall wellness and health. Then there is a reactive health management, because you want to prioritize products for virus containment, which is masks, sanitizers, hand washes, all that starts getting pushed. Then you start preparing for your pantry preparation, which is your food, so stockpiling of shelf foods and health and safety products. And there is a spike in store visits, and there's a basket growth happened. We did show you that how the basket growth happened on the store front in the Chinese market, and we have seen similar things in India too. And then the stage 4 is, which we all are living today, minus China, because we're all in the lockdown or the quarantine stage, where there is increased online shopping. There is declining or next to nothing store visits. There are rising out of stocks because of supply chain issues, and there are strained supplies coming through because the whole logistics has been disrupted. And once we are coming through out of a complete lockdown into more restricted living, which I think we're expecting beginning of May or mid of May, the major part of the world will come into this restricted living, and which is what China is seeing it today. So there is severely restricted offline shopping. There is volatile pricing and fulfillment challenges. And then moving to the next stage where we all adapt to the new normal, which we all going to see after COVID situation, which is how do we live the new normal. So there'll be a permanent shift in supply chain, and use of e-commerce and hygiene practices will be a new way of life, and we will touch these areas as we move forward. This is an interesting representation. This was the prediction for China e-commerce growth. So if you'll see that in 2020, they were expecting a 23.7% growth on their e-commerce, which is going to be a $2.38 trillion business. It is very so. If you look at India, it's a 40-50 billion dollar give and take industry. So the expectation was 23.7%. However, we expect that the expected number, which was 23, 2018, is going to change again in China, because I think the growth rates will in fact go up further. So the estimate that 2023 e-commerce in China would be a $3.8 trillion business. It's going to be surely beaten, and it could be upwards of four and a half, $5 trillion business. So it's going to really help e-commerce as a retail e-commerce sales for retailers, FMCG companies, and pure play retail companies. So we surely see a serious uptake of e-commerce, and countries like China, India, Middle East, Southeast Asia will see some serious growth rates on e-commerce for either pure play e-commerce companies, retail companies who have e-commerce as a channel, or CPG companies which are using e-commerce as a large channel. So we wanted to highlight that we are looking that these growth rates will not go down. In fact, we expect them to go up for all the economies. Similarly, if you will see again China learning that affected by COVID-19, e-commerce gains higher penetration under two areas, which is amongst the older consumers, older by age, and amongst the low tier markets. When I say low tier, is the economic strata. So let's look at both the graphs. So if you'll see the color palette is below 18, 19, 24, 25 to 30, 31 to 35, which is predominantly the millennials, as they're called in this bucket, to 36 to 45 and above. If you see that in Jan in China, this is the e-commerce consumer contribution, and 2 weeks after Chinese New Year, which is the whole COVID situation, you will see that the highest growth rates have been seen in consumer segments, which are 36 to 40, 41 to 45, and above 46, which has reduced the contribution of the millennials. And so basically, this situation has led to new consumers sets which were not adapting to e-commerce to shift to e-commerce from an age group perspective. Similarly, yes, it's done by compulsion. And in the past, in SARS, it was seen that once this habit has changed, close to 60 to 70% of the people stick to that habit and do not go back to the old habit of dependence on offline retail. So this is a big change we are expecting. Similarly, on the economic strata, you will see that e-commerce was more upwardly mobile, well-to-do kind of phenomena in terms of tier 1, tier 2 kind of contribution, and it has moved to tier 3 and tier 4 contribution from from an economics data and a social and geographical location perspective. So it is leading to higher penetration by age segment as well as by tiers. So these are fundamentally all guiding towards that e-commerce penetration is going to grow from all possible either tier 2 and tier 3 cities as well as by age groups. Um, Online, we have seen that online brands have been doing very interesting stuff. So, for example, Puma and Lululemon have been doing online sports courses to maintain brand value. So, in such restricted situation, they've used online and started delivering online courses. So, a very close customer contact, very personalized, very online-ish way to potentially use this situation. A lot of brands which are not online have really expanded their online presence. For example, Adidas X came on Tmall. It's like any brand which is today not on Amazon comes on Amazon and uses that opportunity. For example, Farfetch has started AR fittings. So because shoes fitting is the biggest challenge, so they launched the whole AR fitting tool exactly during the COVID period. Similarly, e-commerce platform push inclusivity initiatives and drive innovation across entire value and supply chain. For example, if you see e-commerce platform which have been doing the whole farm to home kind of concept, so that they can figure out the products right from farm and straight away give it to the customers. Again, resolve, they have gone into CSR initiatives because the offtake and the supply chain was disrupted. They started distributing all the produce which can get rotten before for all the needy ones. In fact, we have seen in India companies like Big Bazaar, DMart have been doing exactly the same. Similarly, they embraced digital innovation to boost sales. WeChat groups. In fact, if all of us have been monitoring this, yesterday there was a big announcement where Facebook took 10% of a stake within Geo Businesses, which is the largest telecom operator. And if you see that the biggest product which Facebook has in India is WhatsApp. And if you read through the entire release publication by Reliance, they clearly said that they're going to use their products to create small micro groups for micro sellers. So basically small groups for SMBs or retailers to start selling to a niche group of customers, making mini programs and highlighting those. For example, we are working with a customer today where we have created mini groups for them for gold, and they have created promotions, and they are trying to create those small groups, and within that small group they're trying to actually work with those customers and tell them how can these designs be good. And similarly, live streaming and contactless delivery. So what they've done is they've taken their store staff and created them into fashion consultants. We've heard of these stories, for example, broadcasting. So we have seen within beauty space a lot of retail staff which works at the on the retail counters now acting as beauty consultants and trying to help their customers and then later book orders from them. Another big trend we are seeing is contactless delivery, because this is the new way life is going to pan out. Saying so, offices, residents creating spaces where deliveries are delivered and you can pick up from there by matching, by using some technology to match order to customer identification. So similarly, as we said, low touch economy could be the key. Consumers and organizations are being much more careful about people and products they interact with. Both people and organizations will expect formal proof of hygiene and current health status. We expect a lot of packaging redesign which take care of these health needs and contact. Basically, how do we reduce the contact? Sharing of personal health records and temperature may become the new norm. Retail and hospitality formats with free services, add-ons focused on cleanliness. In fact, I was reading an article by one of the largest retailers, retail group, which is Future Group in India, and they spoke about saying that that they expect that the cost of retail delivery is going to go up by 30% uh, go up by close to 15 to 20% as they see this cost escalation because of trying to manage the health requirements from government or from customers for physical entry into store. Uh, I hope I'm audible because there was just a complaint that I was not audible. Let me try again. So again, contact-free deliveries and drop-offs are going to become a big norm. So it's like a lot of retail and distributors will need to switch to delivery and remote first kind of structures. So specialized delivery solution, example, drop-off points for frozen, cool food, advanced supply chain optimization, for example, multiple bundling deliveries to same household or street. So example, I don't know how many of you've seen that Dunzo as a delivery group has seen a huge offtake in India where they can pick up from any of the shops and bundle your order and get it very fast for you. So these kind of delivery options will see a huge traction. Uh, I think the organizations will need to adopt to these new realities, and we wanted to actually give you example. So basically, it is about switching from defense to offense. What we are saying is that yes, COVID has hit us, and we need to be focused. All of us have been focused on mitigating the business risk, which is crucial, so that we align our costs to get down to a manageable P&L perspective. But it is also time that we also go on offense. Basically, it's time to prepare for the next phase. Industries that were stable for a decade now uh, are wide open to turn around, and fast and decisive decision makers will move on. Right. So I think here are a few examples. Right. During the recession, Sanofi increased its R&D expenditure from US 950 million to around 1.3 billion, and they really took advantage of it. I just spoke about SARS was a time when Alibaba really uh, took off. A cosmetics company like Jungon actually ended up closing 40% of its store during in COVID-19, but they have converted 100%, 100 plus beauty advisors they had deployed into online influencers, and they have started using WeChat and other engaging platforms to get sales. And in fact, in Wuhan itself, they achieved 200% growth in their sales. So companies have not only been on defense, they've used this as an opportunity to change the way they reach out to their customers or they look at their product, and they got great results. So that's broadly the point, saying that this also an opportunity to think through and go on offense. We thought that we should leave you with a Ixula perspective or a framework saying if you are looking at your business, how should you look at it? I have last few slides where I'm presenting now. So again, on the y-axis, we have seen that potentially, God knows, we have seen in the past that it's normally a V curve recovery. So rather from SARS and MERS, we learned that it's a V curve recovery, and we're expecting that this is the best case, but it could be a U curve recovery or a L curve recovery. I wish it's not like that. And on the x-axis, we have seen that businesses which have a positive impact. So, for example, we know that gaming businesses, e-commerce, currently e-commerce, uh, essential businesses have seen a positive impact. And so, example is e-commerce, right? Then there are businesses which are mildly negative, consumer goods, 0 to 15% drop in their sales. And then there are some businesses which are seriously impacted, oil and gas, between 15 to 50%. And then some businesses which have a catastrophic impact, for example, travel, where they're seriously impacted. At this moment, I'm not looking to discuss a severe or a catastrophic impact because we anyway share the presentation. We thought let's focus our energies on more positive and mildly negative impacts. You will see that if in a week of recovery, you need to ride and boost the supply to keep up with your demand surge. So in fact, with a lot of our customers, we have seen that they have quickly, either they are pure play e-commerce players. So few of our customers in the US have seen 40% month over month sales increases to 100% month over month sales increase because the offline options have closed down. So people in home and decor categories have seen and which is a non-essential spend, have seen between 40 to 60% growth rates. In the essentials category, people have seen 300% growth rate. So I think they just need to ride the wave. They're lucky, and push. And if it's a U curve, they need to push for growth and market share, because if their business is stayed positive in such a scenario, and they're going to get huge leverage. If they're mildly negative, I think they need to wait and adopt channels which are giving them. So for example, I think consumer goods companies should look at e-commerce in a big way, because that's how they can offset and correctly use this opportunity to bounce back in their sales. So if you will see, to summarize, there's a huge surge in e-commerce. So business who have an established digital commerce presence should assess if their platforms and infrastructure can support these huge surges in demand. It's a very positive problem to have. Business need to reorient their aspects for their business towards digital commerce. If you've not been focused, your investments are little lesser on the digital commerce side, you should use this opportunity to increase those investments, because offline we can connect with you and tell you stories where customers are, their traffics are doubling on their e-commerce channels. In few cases they've increased by 1000%, right? So they need to be now investing in the direction of commerce. If I have to leave few specific pointers as to what to do, for example, companies which are already not established should surely put up a commerce control tower within their companies and get leadership attention towards that direction, that e-commerce is a new way which can help them, right? Similarly, on platforms, I did mention that you need to increase your server sizing and ensure that you are ready for the higher increased demand. You need to change your customer journeys. For example, we have heard that a lot of online grocers like Okado, they introduced something called a virtual queuing system, because there are so many online orders which they need to put in a queue structure, and they saw a 1000% increase in their traffic. So change change your consumer the whole user experience to this new opportunity or a new need which has been got created. Similarly, look at your entire marketing return on investment and your channel mix. So for example, we are seeing that a lot of spends are moving digital, because customers are at this moment are trying to access their commerce needs, whether it is shopping or generally through commerce. So smarter companies are quickly shifting their advertising money there. Again, on the channel side of it, you need to choose e-commerce channels, because that's what will quickly get you traction, as the rest of the things are restricted. Similarly, I think your audience mix is changing. I think we did discuss that yes, 45 plus audience is now coming online, and few of the categories where they were not coming. Similarly, tier 3, tier 4 cities, tier 5 cities, people are coming, and your current consumer segmentation was not addressing that. So you have to quickly look at your customer segment and potentially address it. Similarly, your supply chain needs to be completely re-looked at. In fact, in this space, I also wanted to highlight that a lot of manufacturers and B2B companies, which fundamentally rely on trade shows and very in-person discussions on getting orders, are seriously looking towards an online B2B platforms to enhance their orders, because in the restricted living environment, expecting trade shows to happen, because they're the, I don't know if you noticed that one of the biggest reasons of spread of coronavirus in New York City has been trade shows. So we do not expect the trade shows to happen again for a very long period of time. And the B2B companies which were dependent on trade shows or one person-to-person interaction for their sales need to find alternative channels. So they need to think about their supply chain as well as look at their channels to look at how they overcome these situations. If you have to summarize, I think the retailers and brands need to look at trust, convenience, and relevance as the three buckets which they should focus on. For example, how do you establish and keep your trust very tight with your existing set of customers? This is not a time where you break any promises or you overpromise and underdeliver, right? I think very strong time where you need to continuously to focus on your trust. Ensure convenience, because how to do drop-offs, pickup services, how to farm to customer houses kind of thinking people need to do, right? That's one thing. And most important is relevance. I think you need to be doing very personalized engagement with consumers, because epidemics also lead to a very jittered emotional state of mind for everybody, right? So brands or companies which will attend to this in a very personalized fashion will be ultimate winners. Uh, how can Ixula help you? This is just last part of my slide. So if this thing interests you, we can do a quick 72-hour assessment of your platform strategy and your prioritization. What are the current issues? We can quickly look at what are your shifting customer patterns. If there is any value chain breakage, if there are any pain points. Within next 5 days, we can actually figure out if we can deploy the platform teams to do changes to your existing platform, or quickly deploy a new platform if that channel was not available for you. And then within 14 days we can assess and your platform strategy prioritization and quickly do mapping around it, and launch your new channels or optimize your new channels, so that within COVID period and post COVID period you quickly get dependent, you get ready for the new low touch economy driven essentially by e-commerce medium, because that's the new reality of life. So if any of you are looking for a help, please get in touch with any of the Xlites and we can quickly run through this entire schedule for you. And if I have to leave you with some thought, uh, I do understand that this is an overwhelming situation for both consumers and organization. Uh, we do know that for certain that business as usual has been disrupted significantly, and in a lot of cases this has been disrupted permanently. But there is an opportunity to double down on e-commerce as customers rapidly changing consumer patterns and habits. This is a tectonic shift in our minds, and we need to quickly adopt to it, and then ensure that we create trust, relevance, and convenience for our customers. And we are here to help. So this is broadly what we wanted to talk about. If you have any questions, I can see it in the questions box. If Oh God. So I have few questions, please. So this is a question from. Please keep on putting your questions here so that I can answer. Ranabir said he was not able to hear me. I'm sorry, Ranabir. I just read it now. Mohit has asked me a question saying, please help me understand the details on beauty category. Mohit, we have noted down your email ID. We will send you the details on the same for the Indian businesses. I've got a question from Mudit. Mudit, just a minute. It's a longer question, so I can't read it. Mudit is saying that the Chinese context is a little different from the Indian context, and in the Indian context, do I think that the time to recovery would be same as China? Uh, Mudit, I do feel that uh, Indian consumers are little more cautious than potentially a Chinese customer. So yes, if they have seen a 4-month cycle, we could be in a between a 4 to 6 month cycle potentially for our recovery. So yes, you have a point saying that we can take a little more longer time. But having said that, I believe that Indian millennial consumers are a very different consumer set, and they may bounce back same as the way China has bounced back. Though I do agree that the non-millennials, which is 35, 40 plus, may take a longer than potentially the Chinese audience. And there is another question from Abhinav. Uh, yeah. With change in consumer age spread, do you see the brand's preference also changing as young consumers have have slightly more risk-taking ability? I think Abhinav, I just answered that question to say that I do see millennials driving the recovery, and their preferences will become the brand's preferences moving forward. Another question from Mudit. Considering the potential traction towards e-com in post-COVID world too, do you think major marketplace should focus their technology and processes to give confidence to the new and existing sellers? Case in point, during demonetization, marketplaces onboarded many sellers but could not retain. Mudit, very interesting question. I think this is a more question around maturity of Indian e-commerce space, because I know this is a question which is very specific to Indian e-commerce, where Indian e-commerce players have been giving weightage to their few limited set of sellers and their merchandise. In fact, in case of Amazon or in case of Flipkart, their own I don't want to name them, but their own companies which have been selling have been given preferences than the whole marketplace model. But my broad learning has been that until unless these marketplaces start paying attention in a fair and a neutral manner to all its sellers, they will never reap the true advantage of a marketplace. So would COVID make them more push in this direction? My understanding is yes, because there would be a cost pressures on them also, and the amount of money they can spend on pushing few sellers or few merchandise or few retailers would be limited, and marketplace model should actually take a bigger adoption in the minds of these marketplaces too. Here is a question from Sumit Datta. How do you view optical businesses since ophthalmology requires contact? Sumit, very good question. In fact, Sumit, I can actually tell you by my example itself. So I'm a new spec user. So I just got my specs around 6-8 months back, and you know that specs takes time to adjust, and the frames and everything. In fact, I've been browsing on Lenskart on the 3D side of it for last 3 days, because I really wanted to use this opportunity to figure out that what kind of frames will make sense to me. And I don't know if you have looked at the whole Lenskart experience, and it's pretty cool and getting pretty close to a real experience. So here's my two-part answer. Yes, experiences like frames is a very personal experience, and you prefer to go to a shop than potentially doing an online experience. But Sumit, I personally think that technology also gets pushed by the need of the business. So I think if I will say that the 3D has not reached 3D fitment of frames on people's faces and not reached a higher level because the adoption from the industry was pretty low. Now, since such a big event has happened and there is a need to potentially adopt, or I won't say need, there is a compulsion to adopt to a low touch economy, maybe technology will also quickly evolve and give an experience which is as near to a store experience, and we may see a huge traction on categories which we had not thought about. Because let's not forget, necessity is the mother of invention. And I personally feel technology has that power, but sometimes since there is no traction from the consumer or the institution side, a particular technology takes a little more time to develop. And I have a lot of hope, especially from an ophthalmology perspective, that should happen. Next question is from Rajesh Kumar Pathak. Uh, how do you see tier 3 and tier 4 market to react post COVID, as consumers are not much comfortable ordering through digital platforms? Rajesh, I think a very similar answer, saying that yes, these segments have, because they have stabilized retail environment in smaller cities, because there is proximity. But I think do not forget that this is a new norm of social distancing. May have at least a year or two before a potential 100% confirmed vaccine comes to us. And I'm not even confident if coronavirus can hit us, there could be another virus waiting to hit us again. So now this is a situation which we all have to learn to live with. So I personally think there are tier 3 and tier 4 city would not react differently than a tier 1 and 2. Tier 1 and 2 was looking at e-commerce as more convenience because of lack of time. I think tier 3 and tier 4 would have no option, given that this new situation demands social distancing, and I see this being a big trigger to e-shopping adoption. I have another question again from Sumit. Oh, in India, what will be the status of malls post COVID? Uh, Sumit, very tough and a tricky question. I personally, let me tell you from a consumer side, I do not see the mall traffic coming back to the same levels for between 6 to 12 months. Maybe around 12 months, if everything looks okay and there is no panic in any way, you will get back to the same traffic which you had in March. So but I personally think that if this period is 12 months, and 12 months is a pretty long period where people's fundamental habits can also potentially change. So I would say that it is surely not the same world for commercial real estate, which includes malls post COVID. And I see that big behavioral change in customers' reason to potentially not go to crowded places, and so unfortunately malls should be affected in a large way, is my understanding. How much? I would say I hope that it is not too much. But the way it is looking like, and if this pandemic extends for longer period, which seems like a situation in India, I think there will be a fundamental shift in the way people will look at going to malls or any kind of crowded space. Next question is from Ranabir Chaudhary. Uh, I think this is more a comment. Uh, Sumit, again, there is a comment. Any insights on luggage industry's recovery in China post CNY? Actually, what I've heard, Abhinav, is that the Chinese return has been pretty V-shaped. So if you look at the total number of flights, traffic before COVID and after COVID in China, it's currently only down by around 10 to 12% from the pre versus post era. So Chinese air traffic or travel traffic is very close to the same levels which it was there before. So I do not. If that's the case, then travel and luggage business should also be in the same range. This was the last question. Any other questions? I can wait for 10 more seconds. Otherwise, we can end the session. I'm waiting for 10 seconds. If anybody else has a question, please put it on the question box and I will answer it. Thank you, everybody. I did not get any other question. So thanks for your time, for an hour invested with us. I hope this was valuable for you and in building a perspective during and post COVID situation, so that you guys can take a more informed decisions about your businesses in terms of strategy and execution for the future. In case you think that any of our thought leaders and Exolites could answer any of your questions or any of your problem statements, please feel free to throw those problems at us, and we'll put our best effort to find an answer if we can. Be there to help you. Just to conclude, I would say that these are testing times. Stay safe, stay home, stay healthy, and take care of your families. We hope this situation will end very soon and we'll back to the new normal. Thank you.